Welcome to Xpense Analytics. This is cash flow in a tough economy. Expense reduction really does work. The challenge, however, the traditional corporate cost-cutting approach runs into two key limitations. Number one, quality suffers when cutting too deep. And number two, areas in which we have to cut are limited. Cost-cutting efforts have great suppliers and locked down costs. With non-core costs, it's different. Our approach at Xpense Analytics: support through implementation and monitoring. Double-digit savings. We know that mid-sized companies are committing more resources to managing direct expenses. We know that our economic climate has created the need for ongoing, sustainable expense reduction. And we know the existing labor force is stretched thin in this new do more with less business world. Businesses worldwide in every industry have one thing in common: savings opportunities in non-core operating expenses. Double-digit savings often are 15 to 35%. Indirect expense reduction. It is possibly the largest contributor to increased profits. It is an ongoing process that involves managers, suppliers, and stakeholders. And it is a reliable standard and maintains quality. It isn't slashing budgets. It isn't eliminating expenses altogether. And it isn't ceasing to work on increasing revenue. We're under the pressure of a global economy. Competitive world forces are driving your market prices lower. The internet and a more intelligent customer are commoditizing all products. Your competition is doing a very good job at keeping expenses lean to gain pricing and margin advantages. And technology, benefits, and overall labor costs are rising, eating up more and more revenue. But a rising tide raises all boats. We don't replace existing team or highlight what they have missed. Rather, we come alongside them with the intention of eliminating waste, improving profits, and aiding the existing employee structure. Time is money. Most often, the supplier is focused more on providing the means than the results. The benefit in bringing in a temporary outside partner is that we can isolate savings opportunities more easily, often with less deployable resources, while you, the client, have more time to focus on your core business activity. The impact of reductions. For example, a company has $50 million in revenue. If G&A costs are 15% of revenue, then indirect spend costs equal $7.5 million. A 20% reduction would save $1.5 million annually. Now, $1.5 million on an 8% profit margin is the equivalent of an $18.75 million new sales increase. This would be equal to a 37.5% sales increase. And we all know, due to current economic climate, increasing sales is very difficult. But CFOs see the challenge. In fact, 67% believe better management of their indirect spend is an important strategy for improving their business. 50% of CFOs said that lowering costs from suppliers is one of their biggest challenges in expense management. Only 41% of national companies use aggregated data to negotiate with suppliers. 78% believe they are not getting the best pricing. 79% agree or strongly agree that their company will increasingly rely on ongoing cost reduction efforts to meet its profitability targets. 37% of CFOs believe their lack of time, attention, and resources are the greatest obstacles to improving G&A cost management. 55% of CFOs believe that poor data quality is their biggest challenge to formal spend analysis, while 51% believe they have too many data sources. 45% believe they lack standardized processes to effective indirect spend management. 72% of CFOs believe their culture will become more resource conscious and less wasteful. 40% believe they will have improved controls that govern employee-originated spending. While 38% of CFOs believe they will have more efficient administrative and transaction processes. 14% believe they will be streamlining and consolidating sourcing arrangements in years to come. 11% believe they will experience improved supplier relationships. So how can you reduce cost? Well, be an educated consumer. Look at what you pay for the goods and services you buy. Consolidate your purchases. Create a competitive environment. Look at processes and ask your supplier what you can do to reduce costs. Ask your vendor to help you manage your spend. Analyze the data to know where to apply discounts. Know what to target through benchmarking. Improve category knowledge through working with subject experts. Matching the right products and services to fit your needs. Negotiate very well. Ensure the pricing and your use matches the profile that you negotiated. So what are non-core expenses? Well, they can include pharmaceutical supplies, medical supplies, food services, insurance, maintenance contracts, merchant accounts, MRO supplies, office supplies, janitorial supplies, telecommunications, and yellow page advertising. So who is Xpense Analytics? We were founded in the year 2000 as Bowman Associates. At that time, we focused only on telecom expense reduction, successfully saving companies millions of dollars over the last 10 years. We began as a regional company, working with hospitals, manufacturing companies, banks, nonprofit organizations, construction companies, and many more. We worked with a Fortune 500 company that has 225 profit center branches around the country for 8 years. We've now begun to transition to a multi-category expense management firm. We changed our name to Xpense Analytics. We're partnered with multiple category experts to deliver full value to every engagement. We thank you for your time today, and we believe the number one question of any CFO or business manager is, what savings opportunity am I missing? We encourage you, unlock the savings and find the extra profit. We can help. For more information, contact us at xpenseanalytics.com.